If you are a Canadian senior, there is a good chance you are paying more for your prescriptions than you actually have to. Across this country, there are provincial programs specifically designed to lower drug costs for seniors, and yet every single year, thousands of seniors either never apply, or they apply incorrectly, or they don't realize the program even changed and they could be paying less. Some retirees are shocked when they finally check their paperwork and discover they've been paying full deductibles or full co-payments for years, when a simple form could have dropped that cost dramatically. In today's video, we're going to look at exactly how these prescription drug programs work across Canada, why so many seniors miss out on the savings they're entitled to, and what you need to check right now to make sure you're not one of them. Before we go further, here's something important to understand. There is no single national program that automatically covers every senior's prescriptions the same way across the country. Drug coverage for seniors in Canada is mainly handled at the provincial level. Ontario has its own program, British Columbia has its own program, Saskatchewan has its own program. Every province sets its own rules, its own income thresholds, and its own deductibles. On top of that, in 2026, a national pharmacare plan began rolling out. But right now, it only covers specific categories like diabetes medication and certain contraceptives, and only in a handful of provinces and territories so far. This patchwork system is exactly why so many seniors get confused, assume they're already covered the way they should be, and never look any closer. So let's talk about the first reason eligible seniors end up paying more than they need to. Many seniors assume that once they turn 65, they're automatically enrolled in their province's senior drug plan, and that's the end of the story. In some provinces, like Ontario, that base enrollment is true. You do get a letter a few months before your 65th birthday, and you are automatically placed into the basic program. But here's the part most people miss. Basic enrollment is not the same as the lowest cost version of that coverage. In Ontario, for example, the standard senior drug benefit still comes with a deductible of around $100 each program year, plus a copayment of just over $6 for every prescription you fill. But if your income is below a certain threshold, you can apply separately for something called the Seniors Copayment Program, and that application is not automatic. If you don't apply for it, you keep paying the higher deductible and the higher co-payment indefinitely, even though you may have qualified for the reduced rate this entire time. Have you ever just assumed a government program covers you fully without actually checking the details? Be honest, because this is exactly the trap that catches so many retirees. Let's bring this to life with a real feeling example. Robert lives in Ontario and turned 65 3 years ago. Like most seniors, he got his letter, went to his pharmacy, showed his health card, and started filling his prescriptions under the Ontario Drug Benefit Program. He has 2 regular medications for blood pressure and cholesterol, and every time he fills them, he pays his co-payment without thinking twice. What Robert didn't know is that his income, mostly from a modest pension and old age security, actually falls below the threshold for the Seniors Co-Payment Program. If he had applied, his co-payment per prescription would have dropped from over $6 down to just $2, and his annual deductible would have been waived completely. Over 3 years, that difference adds up to a few $100s Robert simply never collected, not because he wasn't eligible, but because nobody told him the lower cost option existed separately from his automatic enrollment. This is where things become interesting, because Robert's situation isn't unique. It's actually one of the most common patterns across the country, but that's not the only issue seniors run into. There's a second, very different problem that trips people up just as often, and it has nothing to do with applying for the wrong program. It has to do with taxes. Here's the second reason eligible seniors miss out, and this one surprises a lot of people. In provinces like Saskatchewan, British Columbia, and others, your eligibility for the senior drug plan is determined using the income information from your tax return. Not an application form asking how much you earn, your actual filed tax return, specifically certain lines like your net income. This means if you don't file your taxes every year, even if you have very little or no income, your eligibility can lapse, get delayed, or be assessed incorrectly. Some provinces require ongoing consent for the tax agency to share that income information with the provincial health ministry every single year. If that consent isn't on file, or if a tax return is filed late, your drug plan coverage can be paused right when you need it most. Have you filed your taxes every year, even in years when you had little or no income? This is one of the most overlooked habits among Canadian seniors, and it has consequences far beyond just income tax itself. Let's look at Susan's situation. Susan lives in Saskatchewan and is 67 years old. A few years ago, after her husband passed away, her income dropped significantly, And in the chaos of dealing with the loss, she didn't file her taxes that year. She assumed there was no point since she didn't owe any tax and had very little income. What Susan didn't realize is that the Saskatchewan Seniors Drug Plan uses your net income from your tax return to determine your eligibility and your renewal each year. Because she didn't file, her coverage didn't renew automatically the way it normally would have, and for several months she was paying full price for her medications at the pharmacy, completely unaware that a missing tax return was the actual cause. It wasn't until a pharmacist asked her directly why her coverage had lapsed that she discovered the connection and got it sorted out. By then, she had already paid out of pocket for months of prescriptions she should have received at a reduced rate. That's the second situation. But before you assume you're unaffected because you always file your taxes on time, there's a third overlooked factor that has nothing to do with paperwork at all, and it catches retirees completely off guard. The third overlooked factor is this. Many seniors don't realize that drug coverage rules change when your living situation changes, and they don't think to update anything. If you move provinces, even just from one part of the country to another for retirement, your old province's drug plan does not follow you. You have to re-enroll in the new province's program, and there can be a gap in coverage while that happens if you don't plan ahead. If your spouse passes away, your household income calculation often changes, which can actually make you eligible for a lower deductible or co-payment than you had as a couple. But again, that's not automatic in every province. If you move into a long-term care facility, the rules can shift entirely, sometimes to your benefit with full coverage, but only if the facility is properly registered with your province's drug plan. And here's a detail very few people talk about. If you have other coverage, such as a workplace retiree benefit plan or coverage through Veterans Affairs, that can actually exclude you from certain provincial programs altogether, or it can mean the provincial plan only pays after your other coverage does. Most retirees never review how these pieces interact, and they don't notice if something has shifted. Let's look at Michael's example from British Columbia. Michael retired and moved from Alberta to British Columbia 3 years ago to be closer to his children. In Alberta, he had been enrolled in that province's seniors drug coverage program for years without any issues. When he moved, he assumed his coverage simply continued, since he was still a senior and still needed the same medications. What he didn't realize is that British Columbia runs its own separate system called Pharmacare, with its own enrollment process and its own income-based plan called Fair Pharmacare. Because Michael never formally registered with BC's Medical Services Plan and Pharmacare after his move, there was a gap of almost 4 months where he had no provincial drug coverage at all. He paid full price for 2 regular medications during that entire period before a conversation with his new pharmacist revealed the gap. The frustrating part is that once he did register, he discovered Fair Pharmacare would have covered the bulk of his costs based on his income, money that simply slipped through the cracks because of a move he didn't think required any extra paperwork. Has anything like this ever happened to someone you know? A move, a life change, a small gap that ended up costing real money? It happens far more often than people expect, and most of the time nobody realizes it until much later. But before we move on, there's a fourth situation worth mentioning, because it doesn't involve a mistake at all. It involves a program most seniors have simply never heard of. Several provinces run additional supplementary programs layered on top of the basic senior drug plan, designed specifically for people with very high ongoing prescription costs, such as those managing multiple chronic conditions. These programs sometimes cap your total out-of-pocket drug spending for the year at a fixed amount, regardless of how many prescriptions you fill after that point. The catch is that these programs are almost never advertised directly to seniors. They tend to be mentioned briefly on a government website, buried under several other headings, and most people only find out about them by chance, often from a pharmacist who happens to recognize that a patient's prescription list qualifies. If you or your spouse take more than 2 or 3 regular medications, it's worth specifically asking your pharmacist whether your province has a high-cost or catastrophic drug coverage supplement, because the savings here can be significantly larger than the basic co-payment reductions we've already talked about. Let's add one more example here, because this particular gap tends to affect seniors managing more serious health conditions. Linda lives in Nova Scotia and manages both diabetes and a heart condition, which means she fills several prescriptions every single month. For years, she paid her standard co-payments without question, assuming that was simply the cost of managing her health as a senior. It wasn't until a new pharmacist reviewed her full medication list that she was asked a simple question. Had she ever looked into whether her total drug costs qualified her for additional provincial support beyond the standard senior plan? Linda hadn't, because no one had ever mentioned it to her directly. Not her doctor, not her previous pharmacy, and nothing in the letters she'd received over the years made it obvious. After looking into it, she discovered a meaningful portion of her ongoing costs could be offset that she had simply never claimed. The lesson here isn't that Linda did anything wrong, it's that these supplementary programs rely almost entirely on seniors finding out about them through word of mouth, rather than the system actively telling people they exist. Now let's talk about something most seniors never think to check: your own provincial health and drug plan account records. Just like the Canada Revenue Agency has My Account, where you can see your tax and benefit information, most provinces have an online portal or a phone line connected to their drug plan where you can check your actual enrollment status, your deductible progress for the year, and whether you're enrolled in the standard plan or a reduced cost version like a co-payment program. Many seniors have never logged into or called about these accounts even once since they were first enrolled. These records can reveal whether your income information on file is outdated, whether you're paying a deductible you may not need to pay, and whether your spouse's information is correctly linked to yours. If you've never checked, you genuinely don't know what that record currently shows about your eligibility. Have you ever checked your provincial drug plan account, or have you simply assumed everything is set correctly since the day you enrolled? This is one of the simplest checks available, and it takes most people only a few minutes once they actually do it. Let's talk about some of the specific mistakes that can affect eligibility or delay your reduced cost coverage, because these come up again and again. The first mistake is not reapplying or renewing when a province requires annual renewal rather than automatic renewal. Some provinces renew your eligibility automatically based on your tax filing, but others require you to submit a renewal form or updated income documentation every year, and missing that deadline can mean a lapse in your reduced rate. The second mistake is failing to update your address with your provincial health registry. If your renewal notice or confirmation letter gets sent to an old address, you may not even know you needed to act until your pharmacy tells you your coverage has changed. The third mistake is assuming a spouse is automatically included. In several provinces, only a spouse who is also a senior, meaning 65 or older, is covered under the senior program. A younger spouse may need a completely different application, like Ontario's Trillium Drug Program, and if that step is skipped, the younger spouse can be left with no provincial drug coverage at all. The fourth mistake is not keeping prescription receipts when a reimbursement-style program requires you to submit proof of payment within a specific window, often just a few months after the program year ends. Miss that window, and you may not be able to recover money you already spent. So where does this leave you? Here's a checklist you can use to actually check your own status, instead of just hoping everything is fine. First, find out which specific drug plan applies in your province, because the names and rules are different everywhere, from the Ontario Drug Benefit Program to BC Pharmacare and Fair Pharmacare to Saskatchewan's Seniors Drug Plan and similar programs in every other province and territory. Second, check whether you are enrolled in the basic version of that plan or whether you also need to separately apply for an income-based reduction, since in many provinces these are two different steps. Third, confirm that your most recent tax return has actually been filed, even if you owed no tax, since several provinces use that return directly to calculate or renew your eligibility. Fourth, if you've had any major life change in the past year, a move to a new province, the loss of a spouse, a move into a care facility, or a change in other insurance coverage, treat that as a trigger to actively recheck your drug plan status rather than assuming it adjusted on its own. Fifth, log into your provincial drug plan portal or call their information line directly and ask two simple questions. What is my current deductible and co-payment? And is there a reduced cost program I may qualify for based on my income? And finally, if you're part of a couple, check that both spouses' coverage is set up correctly and separately, since assumptions here are exactly what cause problems for some of the retirees we just talked about. It's worth being clear about something important here. Not every senior will qualify for a reduced cost program, and the exact amount you could save depends entirely on your province, your income, your marital status, and your specific medications. This video isn't telling you that you're guaranteed extra savings. It's telling you that the system is complicated enough and different enough from province to province that checking your own status directly is the only way to know for certain where you actually stand. There's one more detail worth adding to that checklist, and it's something seniors with a spouse or family member helping manage their care often overlook. If someone else handles your prescriptions or pharmacy visits for you, whether that's an adult child, a caregiver, or a spouse, make sure that person also knows what your coverage actually includes. Several of the gaps we've talked about today, Robert's missed copayment program, Susan's lapsed coverage from an unfiled tax return, Michael's 4-month gap after moving provinces, and Linda's unclaimed high-cost supplement were only caught because someone else, a pharmacist, a family member, or a new healthcare provider, happened to ask the right question. Coverage gaps tend to stay invisible until somebody looks closely, so it helps enormously to have more than one person paying attention. It also helps to know who to actually call when you have questions, because the right phone number depends entirely on where you live. Your provincial Ministry of Health website will list the specific drug plan name for your province, along with a dedicated phone line for questions about eligibility, deductibles, and renewal. Your pharmacist is also an excellent resource here, since pharmacies deal with these programs daily and can often tell you within minutes whether you appear to be on the standard plan or a reduced cost plan simply by looking at how your prescriptions have been billed. So here's the bottom line. Prescription drug coverage for Canadian seniors is not one single simple program. It's a patchwork of provincial plans, each with their own enrollment steps, their own income thresholds, and their own renewal requirements, and the gaps between automatic enrollment and the lower cost version of that same coverage are exactly where so many retirees lose money without ever realizing it. Robert overpaid for 3 years because he never applied for a separate income-based program. Susan lost months of coverage because an unfiled tax return quietly affected her eligibility. Michael went without any coverage at all for 4 months simply because he moved provinces and assumed his old coverage would follow him. And Linda paid full ongoing costs for serious chronic conditions for years before anyone mentioned a supplementary program even existed. None of these were dramatic mistakes. They were small, easy to make oversights, and that's exactly why they're so common, and exactly why they're so easy to fix once you know to look. If you take one thing away from this video, let it be this. Don't assume, check. Log into your provincial drug plan account, make sure your tax filings are current, ask directly whether you qualify for a reduced deductible or co-payment based on your income, and if you manage multiple ongoing medications, specifically ask about high-cost supplementary coverage too. It takes very little time, and for many seniors, it can mean a real difference in what you pay at the pharmacy counter every single month, month after month, for years to come. Now I want to hear from you. Have you checked your provincial drug plan account recently, or is this the first time you're hearing that basic enrollment and reduced cost enrollment can be two completely separate things? Let me know in the comments below. And if you know another senior, a parent, a neighbor, a friend who might be paying more than they need to without realizing it, share this video with them. It could genuinely help them save money. And if you want more videos like this one covering CPP, OAS, GIS, and other benefits seniors often miss, make sure you subscribe so you don't miss the next one. Thanks for watching all the way through, and I'll see you in the next video.